Today we're going to speak about technical analysis of the financial markets, namely the pennant pattern and its trading secrets. Pennant is a trend continuation pattern used in technical analysis of stocks and any other securities. It is a very common stock chart pattern which is money-making if you know the crucial features that I will describe in this video. Hi, I'm Michael Exman. In this video I will talk about how to apply the pennant pattern in trading, and as usual I will share my own know-how and techniques so you get the most out of your pennant pattern trading. In this video you will learn what the pennant pattern looks like and how it is formed, volume and its specifics with pennant pattern trading, how to consolidate the pennant pattern and large market powers actions. Here I will show my own techniques which can greatly improve the accuracy and profitability in the pennant pattern trading, optimal entry point and optimal values for stop loss and profit target according to the best practices in technical analysis of the financial markets, pro tips and real-world market case studies for stocks and futures. If this is your first time here and you want to learn top financial market secrets, what are the most profitable strategies, how to trade stocks and other securities and make good gains, technical analysis tips and all types of other financial market related stuff, start now by subscribing and clicking the bell so you don't miss anything, new videos every week. Pennant pattern is a continuation pattern applied in technical analysis of the financial markets that enables you to open positions when you expect the current trend to move on. This pattern consists of two parts, a flagpole and a pennant. It is formed as follows. Stocks move up and form a flagpole. In most cases, this is a rapid, explosive move. Then a short-term stagnation period starts. At this time, the stock's movement resembles a pennant. The range of stock movement is narrowed, and in just few days we can pinpoint an upper pennant pattern trendline and its bottom trendline. We expect a breakout of the upper trendline at a large volume and a further rally of stocks. This pattern is very similar to the symmetrical triangle pattern. The main difference between them is the time of formation. The pennant pattern is a shorter-term version of the symmetrical triangle pattern. A perfect pattern must abide by the following rules of volume behavior. A flagpole is formed at large traded volumes, and when a small stagnation of a security begins, the pennant itself is formed at low volumes. A breakout of the upper pennant pattern trendline shall take place at the increased volume. My approach to trading is based on the patterns in big capital behavior in the markets. I will now share my thoughts on what is happening on the market when the pennant chart pattern is formed. An event takes place when a rapid rally in the stock price begins. The price propels upwards. Note, one of the main rules for smart money is not to buy high when you can buy low. Let's presume that something boosted a rapid rally of the stock price. During a relatively short-term period of the rally, not all big capital has entered long positions at the desired price. The large market powers intend to increase their positions by buying stocks from the crowd at a lower cost. Therefore, they stop buying and thus stop giving a boost to the price rally at this point. The price starts to decrease and at a certain level big capital buys off stocks from the crowd. This is how the bottom pennant pattern trendline is formed. The selling crowd can consist of both investors in doubt who act emotionally when they see the price starting to drop and the traders who trade very short-term time frames and sell securities when the profit at this level is enough for them. The pennant trend lines start to converge while volume drops, since fewer traders want to sell. At some point, big capital resumes boosting the rally of the stock price. A breakout at a large volume takes place and the price continues its rally. In my Twitter feed I post fresh market insights that can help you make better trading decisions. There I also post my recent big winners in stocks, futures and some currencies. There you will see the stocks that I select based on my custom analysis method, when I see the potential for a big trend movement in them. For each security I show my low-risk entry point a few days before a strong trend begins. The stocks I select very often grow in price by 50%, and some of them may even double their value in just a few weeks. You should see this to make sure that price action in the financial markets is indeed predictable, and understand that if I can find out so precisely and well in advance which stocks go up, then you can find this out too. So watch this video to the end and then check out my Twitter feed to see how my forecasts prove to be real-world market movements worth millions of dollars. And now let's talk about the entry point. It is located just above the upper pennant pattern's trend line. Remember that a breakout above the line should be accompanied by a sharp volume increase. Traders usually prefer to place a stop order below the lower price point of the pennant formation. How to predict the target of the trade? To do this, it is necessary to measure the flagpole on the chart and add the distance traveled approximately to the middle of the pennant. It often happens that after the breakout, a retest takes place at the level above the pattern's upper trend line. It means that after the breakout, the price drops again to the upper trend line or a bit lower. The retest is considered successful when the price almost immediately goes back to the closing level of the breakout bar. And after a successful retest, the price goes steadily up. The bearish pennant follows the same logic. A downward move that forms the first part of the pennant stock chart pattern, stagnation and the pennant formation itself, then waiting for a downward breakout. It's all the same when it comes to volume. A large volume on the flagpole, reduced volumes on the pennant, and a downward breakout should be consolidated with greatly increased volumes. We are going to dive into the most effective ways of applying the pennant pattern in just a few seconds, but before we do, I want to know what is your favorite stock chart pattern and how do you apply technical analysis of stocks in your trading. Put in the comments below, share your experience, it's very important for all of us. So comment below with your favorite stock chart pattern. For a special benefit, I have prepared a free video training called Insider's Hack Number 1, how to predict prices in stocks and commodities with 95% accuracy. The method is based on real actions of large market powers. In this free video training, I share in detail the patterns in big capital behavior and how to learn in advance that smart money is preparing for the next big trend. The link is in the description, so please sign up after watching this video till the end. And keep on watching, insights are guaranteed. I will now show you real-world case studies with technical analysis of stocks and commodities. In May 2017, a flagpole was formed, then a pennant was formed within 6 days. The range of price movements narrowed and both pennant lines were clearly formed. We could pinpoint the entry point at this level. There was a breakout at a large volume on this bar, but the next day the price went below the trend line. Therefore, a classic stop order below the low of this bar would allow us to stay in the position and hope that the retest would be successful. That is exactly what happened. The next bar closed above the breakout bar and the pattern worked like clockwork. By the way, some prudent traders prefer to wait for a successful retest and open their positions thereafter. Like any stock chart pattern, the pennant pattern should be used in conjunction with other market signals and not only common signals of technical analysis of the financial markets. My personal approach is based on the fact that, first of all, we should rely on the patterns in big capital behavior that lead to trend movements. For example, this uptrend of gold futures is the result of the big money pattern. Let me show you how it works. Do you see this curve? These are the commercials net positions. Commercials are the largest players in the futures market, in this case the largest producers and users of gold, who provide weekly data on the changes in their net positions. These data are published in the weekly COT report. Please note, the previous 9-week upward price movement for gold started when the commercials positions reached this level, and here is how the pennant pattern's uptrend looks on weekly chart. The uptrend started right after the commercials net positions reached the same level where the previous upward trend move started. Thus, based on big capital behavior, we learned in advance about the coming rally for gold. Therefore, in this case, we used the pennant pattern based on the evidence that the big money is in the game and it expects the price of gold to move up. Knowledge without practice is useless. Therefore, with the utmost dispatch, right after watching this video up to the end, accomplish a simple practical task that I have prepared for you on my Instagram. It will allow you to go straight from theory to action. So, as soon as you watch this video, just go to my Instagram page, check what I have prepared for you there and become a successful trader faster than others. Below this video there is a hashtag for you to quickly find that practical task, and you can use my Instagram page as a source of your daily motivation. I post many helpful things there and links to some valuable free stuff that I have. In the meantime, let's move on stocks and see how pennant's stock chart pattern works. In early January 2018, Google stock propelled upwards. Then only 3 days of uncertainty followed. during which a pennant stock chart pattern was formed according to all the rules at reduced volumes. The entry point was just above the upper trend line, and as early as January 12, a breakout took place and positions could be opened due to large volume. The chart was so strong that the next day the price opened with a gap but reverted to the closing level of the breakout day. Google stocks stood still for several days, and then the pennant stock chart pattern worked in full. Another example of technical analysis of stocks, Boeing shares and the pennant pattern. Here we see an excellent example of how to use the pennant stock chart pattern in conjunction with the earnings report. On January 30, 2019, we expected Boeing's earnings report. By this time, the pennant pattern was clearly formed with the flag pulse high at the level of $367 and stagnation with the pennant formation prior to the earnings report. After the release of a strong earnings report, the Boeing stock opened with a gap, stayed at that level, then traveled upwards, reaching $446. The rule I follow myself and teach the members of my website investwinners.com is to either completely close the position before the earnings report or significantly reduce the position by leaving a small part if you have good reason to believe that the stock will move in the right direction. That is why I bought Boeing stock only after the report's publication at the breakout of the next pennant and closed the position at almost the high point of this movement with a great profit. This is how it is done in real-world practice, and my system is focused on such trend movements. I hope you liked this video, I hope it was useful. Let me know if it was helpful, leave a comment below. Let me know if you want more videos about technical analysis of the financial markets. If you enjoyed this video, give me a thumbs up, give me a thumbs down if you didn't. If you got value from this video, share this out on your networks, Facebook and Twitter. Take a screenshot and share it on Instagram. The more you share this message, the more people will be grateful to you, especially me, so please share it. If you want to know how to predict prices in financial markets and make huge gains with this knowledge, click the link in the description to check out my free video training, Insider's Hack Number 1, how to predict prices in stocks and commodities with 95% accuracy. The method is based on real actions of large market powers, because if you want to make right decisions, you've got to follow the direction of big money. And in this free video training, I'll show you how it works. If you are serious about becoming a successful trader or investor, make sure to sign up for this free video training right after watching this video till the end. It's absolutely free and it's extremely valuable. So use the link in the description or go to my website investwinners.com. Click this button, enter your email and name, and I'll send right to your inbox the link to access my training for free. You also may be interested to discover membership options that I have. Members of my website receive my weekly report featuring stocks that are ready for a big market move according to my analysis. We catch big winners every single week and you are welcome to join. Check out our recent big winners on Twitter and follow us. Make sure that you subscribe for new videos every single week. Thank you guys for watching, I'll see you in the next video. Happy trading and be smart, follow the direction of big money.